And our next speaker, Ken Mehlman of KKR, is here to argue why rebuilding the world starts with the workplace. Ken is an architect of the firm's responsible investing efforts in a career that has spanned business, politics, and philanthropy. So please give him a warm welcome to the stage.
Thank you very much. Appreciate the opportunity to be with you today and look forward to our discussion. This past summer, if you're like me, you probably spent a lot of time in airports seeing the screen above us as the screen with respect to travel. Planes were delayed at an unprecedented level. There were flights that were canceled. There were queues in many places. And many people at the time explained that what we saw was, in fact, the result of the recovery from a 100-year event, the COVID epidemic. And they were right. But in my opinion, if that's all we think about those flight delays, we're missing a much larger point, a point that each of us needs to address. And that is the real lesson of COVID was not what was unique to COVID. It was the lesson of what happens when a world does not prepare for a foreseeable risk in the future. We had seen SARS, we had seen MERS, we had seen Ebola, we had seen warning after warning about the forthcoming risk associated with the pandemic, but the world did not prepare. And what I would like to argue is that past summer's travel travails are in fact a similar warning for the future that we need to respond to. Consider the following. In the 5 years before COVID hit, starting in 2015, 2016, pilot openings for airlines had increased by 72%, but the number of pilots had only increased by 12%. Today, if you look at the demand for nurses, the demand exceeds the supply by 10%. Electrical engineers, demand exceeds supply by 3%. Another challenge that we faced this past summer was as airlines tried to rebuild, there was a long lag because of training. It takes years to become a pilot. Guess what else it takes 5 years to become? Someone who's certified to work in cybersecurity, a critical need we know that's going forward. So if you look at industry after industry after industry, whether it's the healthcare industry, whether it's the energy transition, whether it's semiconductors, example after example exists whereby, in fact, the airline meltdowns we saw are coming to an industry near you. In fact, if you step back and think about it, these are the result of structural challenges that I have 5 numbers that I think help explain what I believe are fundamentally 3 structural challenges. The first is demographic. 350,000, that's the number of Germans who leave the workforce every single year as compared to entering the workforce. Net 350,000 fewer workers. By the way, that's not unique to Germany. That's true across Europe. It's true in China, it's true in the United States, it's true in Japan. There are exceptions like India and others, but the reality is we face a demographic challenge because my parents and many of your parents' generation, the baby boomers, are retiring and there are fewer workers to replace them. The second structural challenge, represented by the 30%, is one that involves technology. The 4th industrial revolution means people are going to need to get retrained and retrained and retrained for their existing and other jobs throughout their lives. Yet 30% of the workforce will need to be retrained by 2030. Do we have the plan to deal with it? And finally is the challenge of people that essentially are disengaged from the workforce and from their workplace. So 5 million. Today there are 6.8 million openings in the United States of jobs for people that don't have a college degree, but only 1.8 million people who are looking for those jobs. That's a $5 million hole among people that in fact are equipped for these jobs but aren't looking. They're disengaged from the workforce. And then within the workplace, 58% of European workers recently said they'd be looking for a different job, potentially. They'd be interested. And according to Gallup, the global polling organization, 54% of workers are disengaged or strongly disengaged from their workforce. So what do we do about it? That's what I'd like to discuss with you this afternoon. As investors, and as private market investors in particular, in my opinion and in our experience at KKR, there are 2 big areas where we can be part of the solution in rebuilding the workforce. First, We can invest in companies focusing in areas like vocational training, focusing on building the data analytics we need to understand the jobs people are going to look for, focus on educating and training the workforce. Over the last 12 to 15 years, KKR has put $3.5 billion in companies where workforce development was the mission, the investment thesis, the product, the service of the business. And the second thing we can all do across any business we own, whatever the company, whatever the industry, wherever they work, is to engage and empower the workforce in a way that mobilizes them to create value. And I'd like to describe an approach we've taken with 30 of our companies involving those employees outside of the C-suite having stock ownership in the company, voicing how the company's operated, and what it's done to improve those companies. So first, investing in what I call the ecosystem of workforce development. In my opinion, there are 4 key components to investing in that ecosystem. First, using data and technology to identify the skills necessary for tomorrow. Second, using that data and technology to upskill workers. Third, creating personalized platforms relevant to each market where you operate, and then each worker as well. And finally, being incredibly rigorous around measuring efficacy and driving outcomes. Let me describe each of those 4. So the first is a solution to the challenge that's listed on that 9% today, just 9% of efforts to upskill or engage workforces with respect to training succeed. Why is that? What I would contend is one particular part of the challenge we face is that we today both train workers and educate workers from a university perspective focused on a credentials-based model. So we say you need a college degree. You ought to get a college degree in this particular area. Except the fact is, different universities have very different ways of measuring how they're, for example, advancing a particular degree, what courses they offer, what skills they promote. And within companies, when it comes to upskilling, different companies have different definitions. So let me give you an example. Say you want to hire a data analyst. A data analyst at Walmart, a data analyst at Nestle, a data analyst at an energy company, a data analyst at Meta, all 4 have a very different set of skills. So what if instead of having what is essentially a Tower of Babel when it comes to the credentials people have on their resumes and by which they're hired and trained, we developed a common taxonomy that could be used across every company, every business, and every university to figure out the skills that are applicable across the board. How do you do it? We have a company in our strategy called Lightcast that does exactly that. Lightcast gathers information from multiple companies with respect to open jobs, who's applying for those jobs, and the skills around those jobs, applies data science to it, and develops a common taxonomy to help employers and universities and others figure out what are going to be the skills of the future and what are the underlying ways that those skills can be imparted to employees who are being trained and being educated. That's step 1. Step 2 is to upskill workers. 36% of people today are either overqualified or underqualified for jobs. And the reason is because there hasn't been that focus on skills. So if you take that information and you use it to apply at multiple companies in multiple venues, you can produce a different outcome. 3, create personalized learning platforms, platforms relevant to markets where you operate and platforms relevant to individuals that are focused specifically on saying, 1, what does this market need to enhance learning? And 2, how does the individual in question learn? We've invested in 3 examples I'd like to challenge folks with and offer. Number 1, and I'll describe this in more detail in a minute. In Spain today, very high levels of unemployment, very high levels of university education, the problem being there's insufficient vocational education. So building a personalized learning platform around vocational education can make a big difference. In Vietnam today, which is friendshoring becomes something more we see around the world, has a potential for substantial expansion economically. One of the most important skills in Vietnam is English proficiency. And so we have a company in Vietnam that runs schools and that is particularly proficient in teaching people English. High school dropouts. In the United States, there's 26 million high school dropouts. Dropping out of high school is often associated with very difficult economic challenges and social challenges, and we have a platform that focuses on that. Each of these are personalized platforms that focus on solving the challenge to that population by building a platform built around skills and a platform through the use of technology and software by which individuals can learn anytime, any place, and learn in a way that's right for them. And finally, the key component, the last component of building this ecosystem is obsessive focus on outcomes and ultimately efficacy. So it's not just measuring how many people are graduating, it's saying what happens 5 years after they graduate. What are their job prospects? Where are they in life? What are the differences between people who have participated in these platforms and other when it comes to skills? To provide a very specific case study, let me talk about Master D, a very hopeful company we've invested in Spain. So first, the underlying context. I mentioned this before. Spain has higher levels of college education than most of the rest of Europe does. It also has higher unemployment. So among people who are under 35 years old, 1 in 3 don't have jobs today. One reason is there's a very high rate of what are called early leavers, people that don't complete even high school, that drop out. And finally, there's a high incidence of low salaries. All of these challenges are rooted in the same underlying problem, which is Spain had, until recently, essentially a very much fractured and relatively anemic compared to the size of its economy, vocational training system. So people learning skills for particular jobs, much less than before. So we found this company called Master D, a really cool company. It had 50,000 students. It had 600 professors. It operated in 36 centers across Spain. It was doing well, 60 million euro revenue. And we said, what if we can take this platform? What if we can acquire others within Spain that are in this and build a very large-scaled platform around vocational training? We've done that. First thing we did is we brought in Lightcast. And we said, what are we training people for? And obviously, you're not going to be surprised when I tell you this. A huge component of what we needed to train people for was healthcare and technology. They became our primary areas. We expanded our number of centers from 36 centers to more than 100 centers. We, by 5 times, increased the number of students that are focused in these key areas. And critically, we also expanded our use of technology. And so today, Spain has the necessary platform so that more people can have the education they need for the jobs that are going to exist in the future. And that's just one example of how we as investors, through our model, can be part of the solution. But once we train those workers for the right jobs and the right skills, the second question is, how do you engage them? Remember that statistic I mentioned to you a while ago? The fact that 58% of European workers talked about the potential to leave, or that 54% told Gallup they were disengaged from their workplace? What do we do about that? I want to talk about a very interesting movement that's built around an organization called Ownership Works. But to describe that movement, I think we should all step back and say, we as private equity investors, what do we really do when it comes to value creation? One key strategy of value creation is alignment. If management of a company has the same financial incentives that we and our LPs have, you have very different outcomes. Henry Kravis, the founder of KKR, always says you don't wash a rented car. You wash a car that you own. By making managers owners, we've seen for a generation how we can create alpha in our companies. But what if that same alignment model, what if that same effort around management acting as owners could apply to every single person that works at the company? What happens then? That's what Ownership Works is focused on. It's an effort that includes 19 private equity firms, 4 foundations, labor advocates around the world, and others, focusing on sharing best practices and building a movement to engage workers across industries around the idea that they're owners of their companies. So critical to this is doing this in what I would describe as a holistic way, and it has 3 components. First, making people owners, giving people, in fact, stock in the companies, meaningful financial interest in the companies that mean something. Typically, it's a year's salary in stock in addition to their salary. It's not a trade-off. It's additional capital, a year's salary in addition to what they already earn. Second, it's making sure they feel and act like owners. It's equipping them with information about how the company operates and then asking them how they would operate differently. How would they transform the company? What would they do differently? What would they operate? Giving them voice in how that company operates. And finally, it's enhancing financial wellness so one, they understand that what they have, they understand what the stock means, and what they can do with the company. All three of those are part of a strategy we've now deployed at 30 KKR companies, and we've seen remarkable results. Here's an example. CHI Overhead Doors. It's a company based in Illinois, middle of the United States, that makes garage doors. 4 sponsors owned it before we bought it. When we bought it, people said, why are you buying this company? 4 sponsors have owned it before you. What can you do to create alpha? In fact, this was an investment that made 10 times our multiple of investment capital. What we did was fundamentally mobilize the workforce. It had never been done before, and it was transformational with respect to this company. Every single person that worked at the company, outside of the C-suite, had ownership interest in the company. We engaged the employees. We engaged them to figure out how we could operate better. We gave them voice. We saw improvements in safety. We saw improvements in revenue. We saw across the board increases in productivity. My favorite involves a gentleman named Larry. Larry was in the business of delivering garage doors. So he drove a big truck from the facility to locations where the garage doors would be delivered and then installed. And one of my partners, Pete Stavros, who co-leads our North American business, one of the things he does as an investor in companies is he spends a lot of time in the company. So he and Larry were driving one time from Illinois to Wisconsin to deliver a garage door. And Larry said to Pete, hey, Pete, you guys pay me by the mile, and so this is good for me. But the fact that you're paying me to go to Illinois today, to Wisconsin, drive back, and the next day go to another location and drive back isn't very smart. Because we're actually, as a stock owner of the company, we could save a lot of money if I made one trip and 3 or 4 deliveries. The fact that someone would apply that thinking tells you what happens. Imagine when a company where 800 people, whatever they do, whether it's delivering garage doors, whether it's working on the assembly line, starts thinking that way. Starts thinking of what they can do to be transformational. CHI garage doors, what happens? You make 10 times your money. Larry, by the way, made about $750,000 to $800,000. It changed his life with respect to what happened, but it also changed the company. And that example, CHI Overhead Doors, can happen in company after company after company if we go forward. So ladies and gentlemen, we gather at a very interesting time. It's a time where at the moment there's a debate in many places around the world, including the United States, including Europe, that says, as investors, how do we balance our fiduciary hat and our citizen hat? And what I would respectfully argue is if we can engage our workforces the right way, if we can train people for the jobs that they need, if we can equip them with the skills they need, and if we can mobilize them to be our partners in how we operate these companies, we can achieve both, and we can achieve incredible outcomes for our investors and incredible outcomes as citizens. Appreciate the opportunity. Enjoy the rest of the conference. Thank you.